Sunday, April 11th, 2021. This is All About Your Benjamins and your weekly mixtape and your weekend review video. I'm back. Needed a little bit of a break. We had Easter thrown in there, but took a few weeks off from doing the videos and doing the mixtape. But I'm back and have a better planned out strategy so that I don't need to take a break and don't get exhausted with doing these, because I really enjoy them and the feedback's always great. But now that I'm back, let's get to the headlines that may or may not be impacting your financial plan and portfolio, and have a handful of articles down below, obviously always from the Wall Street Journal. I would encourage you to have a subscription if you want to read those, but hopefully my descriptions tell you what you need to know from them. And we'll start off with the stock market. We don't talk about the market a lot per se, but the market is still doing very well. Year to date, I think the S&P is up a little over 9%, but we're heading into earnings season, which is what the article talks about. And right now, expectations for earnings are good. If you think about coming out of 2020 and COVID, everything shutting down, vaccines being distributed, we're having numbers go down in some states, although seeing some states spike back up with COVID cases. But all this pent-up demand is expected to be good for the economy and good for businesses. So the expectations for earnings season should be good. It's going to be looking back over the first quarter. So what does that mean? Well, we don't know. Sometimes the market likes to what we call sell the news, meaning they priced in things are going to be good. Things end up being good, and then you might see a sell-off because they expected it, they got what they expected. There's no room for upside surprise, so they sell off because that was the expected return. Nothing new came out of it. Or it could just be confirmation that things are good and we're feeling good about that, and investors are optimistic that it's going to continue, so they continue to buy up the market. So we don't know, and again, that's why we take the long-term approach, we take the diversified approach. This year, diversification is actually helping some of us that have been hurt in the last, with value investors seeing value come back a little bit, international funds doing good. So long-term approach, diversified portfolio, and then not reacting to the news, not reacting to earnings. If you're holding individual stocks, you may see a little bit of fluctuation there because you're owning that one stock, and one stock has an opportunity to have a greater impact during earnings season than a basket of stocks like a fund would. But that is kind of what the expectations are for the market. Pull in some conversations from the Fed. Minutes from their meeting came out saying that they continue to expect to see a strong economy, the economy recovering, which would feed into the expectations we're seeing on Wall Street, and that they plan on keeping interest rates near zero till 2023. So not a lot of change there. So if you're thinking about what does this mean to investments in the market, those expectations, it would lead you to think that the market should continue to do pretty well over the longer trend. There could be fluctuations. We had some selling off a couple weeks ago. That's going to be a part of it. But if you think about the trend in the short term, it should be good because there's not a lot of change other than hopefully seeing that the economy is bouncing back and interest rates being low. It encourages people to go out and take money sitting in cash, earning nothing, and do something with it, whether that is invested in stocks, invested in cryptocurrencies, invested by starting a business. It's the incentive to go out and do something rather than leaving that cash sitting there. I say expected, that's what we would think might happen, but I also think you can go back to last year this time, and excuse me, and what was going on in the markets was not expected. This was about when the recovery, I believe, was starting to creep back up, and we are still in the middle of everything being shut down and a lot of scary news out there. So what we expect to happen doesn't always happen, so it's, again, a case for diversification. We'll go to jobs. We are seeing that fewer people are using unemployment, or that they're coming off of it, collecting less right now, which means they're going back to work, finding opportunities to get back to the market. So one of the concerns with the enhanced unemployment benefits was people are making more money staying at home. Why would they go work? And while I do think there are some people who will take that way out, I do think that most of us are ambitious. Most of us don't want to feel like we're relying on other people to take care of us, and that when the opportunity presents itself, we're going to go back to work. And that's kind of what we're seeing there. So that is a positive thing as well. Again, feeding into the Fed's optimistic outlook and feeding into Wall Street's optimistic outlook as well. All this optimism might make you a little nervous if you're trying to be playing the other side, if you're trying to be going against the grain. Coming back into jobless kind of numbers, an interesting scenario. I don't know if you've heard about the supply troubles that car manufacturers are having. all of our cars today are basically mobile computers. There's so much technology, so many computer chips that are in our cars to help it drive, whether it is driverless cars, auto steering, whatever it might be. There's a lot of computer power in our cars, and there was a shortage of chips during COVID with plants across the country and across the world being shut down and not making these chips. Now we don't have enough chips, and we're seeing GM shut down production in a number of plants due to not having enough chips. They can't build the cars because the chips aren't there to make it happen. So it's one of those things that you probably never thought you would ever hear, but it's not a shutdown because there's not enough demand. It's not a shutdown because there's not enough people. It's a shutdown because there's not enough microchips to go into the cars to feed all the computer power. So we'll monitor that. GM is breaking into the electric vehicle. They're advertising their electric Hummer, which looks pretty cool. So it'll be interesting to see how that impacts that area of the market. Going into other companies, Coinbase is going to be IPOing. So Coinbase is the largest app, the largest provider for access to cryptocurrency, Bitcoin, Ethereum. That's where most people get their first introduction to buying cryptocurrency. It's been private, it's going public. It's going public in a direct listing, which means they're not hiring a bunch of Wall Street banks to help them go to the market. They're just going to go directly to the market themselves, which is something we've seen over the last couple of years. Saves them a lot of money, and we've seen some instances where the bankers have not got the pricing correct on the IPO. And when the pricing is not correct, that's when you see a one-day tripling of the price. That means that the underwriters left money on the table for the investors, and more and more companies are leveraging technology to be able to do it without the Wall Street bankers, saving money and hopefully getting a better price for their investors. So it'll be interesting to see how that plays out. As you probably know, cryptocurrency is becoming more and more talked about. 2017, it was all the rage. A lot of people talking about it, knowing nothing about it. You fast forward to now, more people are talking about it, more people are investing in it. You have large corporations investing in it. We've talked about it numerous times, and it's just going to be something that'll be a part of the conversation, and I believe a part of the portfolio for some going forward. So we'll see what happens with Coinbase. And we'll end with some sad news. The rapper DMX, as I'm sure you already know by now, passed away after being in a coma for a week. If you are my age or if you have children my age, there's no doubt that you have heard DMX over the years. He is one of the most respected rappers out there, and one of the cool things about it is he actually is one of the only, I think he's the only artist to have two albums debut number one, his first album, his second album in the same year, and they ended up both going platinum. He was a aggressive rapper. The things he talked about were real life. I enjoyed it. It's great music to work out to, great music to get pumped up to for basketball games, which is what it was in high school. I included a video. It's not safe for work when it comes to language. If you've got kids, you may not want to watch it with them. But it is DMX actually going through some of his most popular songs and giving you some insight. I love getting insight behind why people create what they create. So it was kind of cool to hear him tell a little bit about the story, a little bit about his pain, his anger that feeds into the music. But as we see, anytime somebody famous or anybody passes away, all of the roses are given at that time, and we're seeing all of these cool stories of DMX going and making food at IHOP or mopping up at a waffle and steak or Waffle House in the middle of the night. Just real cool stories that while he was this person who struggled with addiction and he had this persona as a rapper with a very hard life, he also was somebody who was very grounded and down to earth. And when I saw the story about him mopping up at Waffle House, he said something to the extent of, if you've gotten too big to be able to mop floors, then there's something wrong with you. There's a problem. And I just thought that was really cool, keeping himself grounded and just, not forgetting where he came from, even though he had massive success. So anyways, a lot of DMX stories floating around, a lot of music of his being listened to again. And so I just shared that story as well. Because I do love hip-hop, DMX, I wouldn't say he's one of my favorite rappers, but his first two albums were in the rotation regularly still, especially when I'm working out. So I listened to his music a lot just over the years. So sad to see his life play out that way, but also pretty cool to see the impact he had on so many lives. So that's it. Check the mixtape down below. As I mentioned, I've got a good plan for making sure these videos don't get missed. Every once in a while, just need a break or things come up where we can't get it done, but want to make sure we keep this consistency going. I also want to encourage you to check out the new show on the podcast called The Pursuit. It's every Friday. I release a new episode, 10, 15, 20 minutes, talking about various topics along the lines of pursuing your passions, living a life that you want to live, and it's almost kind of like a audio journal for myself, but hopefully you find some value in it as well. And there will still be monthly interviews with founders talking about how they pursued their passions to create their business and how their business aligns with those values. So enjoying the podcast, falling back in love with that again, kind of goes through some spurts. But that's it. Get to your weekend. Have a great day. Be sure to check the mixtape down below, and we'll see you all in the next episode.